Thank you for reminding me. All right, guys. Can you guys hear me? All right, cool. Awesome. Awesome. Yeah, this is how I mark up my charts, okay? And then once you get that break of structure, so right now, market didn't break structure, right? Market, uh, it created a support, right? It touched the support level. Right now, it never broke through below this hourly zone because it's right now it's at a support level. You see how it's supported here, bounced off, went back up, and then came back to retest again here, and then bounced back up. This is a strong support level, okay? But it was once a resistance level. You see here, you gotta look left to be right. It was once a resistance level, okay? Here was a resistance, but then price broke above, right? And then came back down to retest. Resistance became a support now. When resistance becomes a support, it's an uptrend. It's buy zone, buy zone, buy zone. Okay. But when market goes from support to now resistance, you're looking for sells. It's sell mode. Okay. But it hasn't done that yet. It's still at a support level because market never price never broke below this hourly zone. It's still above this zone. So right now it's still on a buy zone. Okay. Buy zone. Right. I'm not looking for sales right now because I'm waiting for it to break below this gray zone. Okay. So right now, market is on a buy zone, right? On a short-term buy, it's on a pullback. But overall, the market is trending down. If you look at the hourly, you gotta look at the bigger picture. Okay. You want to trade with the trend. You don't want to go against the trend, right? If you look at the bigger picture, at the hourly, market is trending down. See, it's creating lower lows and lower highs, lower lows, lower highs, right? It's trending down. So it wouldn't be smart to look for buys because you're going against the trend. It's a lot riskier. Yes, you can scalp it. You can do a quick scalp, you know, for a buy, but you can only catch 30 to 50 pips, right, on that buy. But overall, it's on a downtrend. I want to catch at least 100 pips. Every trade I take, I catch at least 100 pips. I don't go below 100 pips. I'm an intraday swing trader. I want to catch at least 100 pips for the day. At least 100 pips. Today I caught 320 pips because it was news. 325 pips. Okay, because it was news. That's a special occasion. But on a daily basis, I catch at least 100 pips on my trades. 100 pips. If it's not at least 100 pips, I'm not taking it. Right? But if you're a scalper, then your goal is to make at least 30 to 50 pips, at least 30 to 50 pips a day. But me, right? I trade from zone to zone and I catch at least 100 pips. Now look at the 4-hour, right? The 4-hour is getting the overall market direction. It's on a downtrend. You see, the 4-hour candle, it's a bearish candle. You see, I like to look at the 4-hour because it's giving me the overall direction as well as a confirmation. Because I use the 4-hour as also confirmation because if the 4-hour closes below this gray zone, okay, if it closes bearish below this gray zone, then that's a double confirmation for a sell. Or if it closes below this, this internal zone here, if it closes red, if it closes bearish below this, either this gray or blue zone, then I'm taking a sell. Okay, I'm looking for sells, but right now, I'm waiting. Now I go to the 1-hour. I mark up my zones on the 1-hour. Okay, on the 4-hour, I look at the overall market direction to see where the trend is heading. And now at the 1 hour, I mark up my internal and outer zones. Okay. You see how price whipped and touched this area here? Okay. So you could have took the buy here and scalp it real quick and could have caught like at least 30 pips. And get the measurement tool from here to here. Yeah, that's 80 pips right there. 80 pips for a buy. Okay. So some traders caught the buy right there. But I'm not most traders. I'm not an average, retail trader. I do smart money. I use smart money combined with market structure. So, break and retest. I use the scanners to confirm my trade, right? Like Impulse. Let me refresh it. So Impulse is telling me right now that look at this, that the market is still on a downtrend. You see? It's telling me that price is still below this red EMA line. When you see price below this red line, then I'm looking for sales only. I'm not looking for buys right now. And look at this. It's giving me a red arrow. The red arrow, the trend is still red. The strength is still giving me a red arrow, right? The macro trend arrows is still all red. You see? Why would I look for buys? I'm looking for sales. See? So Impulse, the scanner, is telling me as well that, yo, this right now is sell mode. Look for sales. So why would I catch his buy? I'm not taking his buy because I'm going against the trend. What I love about Impulse, that Impulse is giving you market, like it gives you the momentum of price, of where price is heading. Okay. It gives you market direction. Now, it also gave me this red microtrend arrow. Whenever you see this red microtrend arrow pop up like this, that's like really, really a good sign because you're looking for sales only. If it gives you a blue arrow, then look for buys. It's gonna trend up. But right now, it's sells right now. Okay, so I'm waiting right now for market to break below 2285. Okay, and I'll wait for the retest and I'll catch to sell. This is a potential trade idea right here. When you see price break below this gray zone, now it's sell mode. So I can put here sell mode. All right. And wait for the confirmation candle. Wait for a bearish candle to form within the zone or below the zone before you take the sell. And you write it down to either 2280 if you want to cash 50 pips, or you can just write it down to 2270. Me, I'll write it to 2275. 2275 will be my my TP1. Actually, not TP1. Will be my TP3 because my TP1 is going to be 2280, right? And then my TP2 is going to be 2275. And then my TP3 is going to be 2270. Okay. Because I enter 3 take profits. Right. I don't take more than I don't set up more than 3 take profits. I set up 3 take profits and that's it. All right. Because I'm doing 1 in 3 risk reward. I risk 1% to gain 3%. Okay. So I'm taking 3 take profits. All right. So in this case, how I set it up, okay, I take my short position, okay. I take my short position, and then this is how it's set up. I have my you gotta be able to calculate the numbers and know your risk before you enter the trade. I set up my stop loss anywhere between 30 to 50 pips. Okay. I usually set up my stop loss, 50 pips, so 22.90. 22.90 will be my stop loss for this trade. And then my profit level will be 22.70, right all the way down here for 1 to 3 risk reward. And the measurement tool also calculates for you, right? It tells you like your risk. 22.70 is my take profit. My entry price, 22.85. There you go. 1 to 3. You see, risk reward 3. That means that's 1 to 3. Okay, 1 to 3. So the measurement tool also lets you know how much you're risking, what's your risk reward, which is 3. Okay, if it's 2, then it's 1 to 2. If it's 1, it's 1 to 1. It's break even. If it's 4, it's 1 to 4. If it's 5, it's 1 to 5. That's how you can tell how much you're risking and how much you're going to get in profit. Does that make sense?
Yes, it does.
So that's how I have my measurement tool set up before I take my trade. So that way I know, okay, how much I'm risking and how much I'm profiting. Now 2280 is my TP1. My next zone, 2275 is my TP2. And then 2270 is my TP3.
I do have a question. When you use I forgot what it's called now. Right before you get on the trade, I seen you pull it out. I know that everybody has different levels when they use that tool. I forgot what it's called. Mm, I'll come back to it. I'll remember.
Levels?
Yeah, no, when it's you go to your tools and then you measure it from the top to the bottom, and then it tells you certain.
Oh, the
Yeah,
measurement tool. This one?
no, it's I completely forgot. But let me see. If you click on it, yeah, the fibs. There you go.
Fibonacci? Oh, yeah, you can use the Fibonacci as an additional confirmation. Um, but honestly, at least as long as you get at least 3 confirmations, at least 3, that's a good trade, right? Fibonacci is just a plus, right? To really, really confirm it. Okay. If I were to use the fibs, right, I can go from this low to this high. You know, actually, I'm looking for sales, so it's got to be high to low. Let's look at the 15-minute. So again, the Fibonacci tool is just for retracements. Okay, you're looking for retracement in the market. That's what's called a fib retracement. You take the high to low to look for a sell, right? You gotta go from the previous high to the previous low. This was the previous high to low. How low can you go? So when you go from the high to low, you're looking for sales. High to low, how low can you go? Low to high, how high can you buy? Right, that's my motto when it comes down to the fibs. High to low, how low can you go? So you're looking for sales. Low to high, how high can you buy? So you're looking for buys. When you take from the lowest low to the highest high. That's how you use the fibs. You got it's from the higher highs and lower lows, lower highs. All right. So now since I'm looking for sales, I'm taking from the previous high to the previous low. High to low, how low can you go? And I look for the sweet spot, which is 50% to 61.8 zone. Right. And this is another training for another day. Like when it comes down to fibs, again, guys, this is more advanced. These for my advanced traders. If you want to study the fibs really well, if you really want to study the fibs and learn, the tool, study Curtis Cobain. Curtis Cobain, favorite sessions. He has a great training when it comes down to Fibonacci levels because that's all he does. He trades off of the Fibonacci levels, and Fibonacci levels are levels, right? Are levels where price has a probability to retrace. Okay, so price could go to the zone, to this level, 61.8, and then you can catch a sell right there. Okay. Because it's a strong, it's a stronger, it's a strong zone, it's a strong level. All right. Or it could go to 78.6, 88.6, and then trend down. But the sweet spot is 61.8 zone, right? Um, Fibs is well known. It's a universal tool. It works in nature as well. Like us, we're, the way our body is formed. We can also use fibs like in our body, like, because everything is aligned at the 61.8, and it's a whole scientific study. You can do your research on that. Go to YouTube, search up Fibonacci, how it works in nature and our biological bodies. But Fibonacci is a universal tool, and you can also use it in trading, right? Which is pretty cool. All right. So again, it's our levels of retracement. If you want to study more about Fibonacci, look at Curtis Cobain on Go Live. But in this case, yes, price could go up and then could retrace back down. Okay. But in this case, I'm not using Fibonacci because I'm just going based on market structure and then the confirmation candle and then using impulse as another confirmation. That's enough, right? And then like I said, as long as you get at least 3 confirmations, you're good. Um, Fibonacci is more for advanced traders, and I just want to keep it simple. I just want to keep it simple, guys. Like I don't want to, overcomplicate you guys. I don't want to make this thing like it. Keep trading simple. Like trading is simple. Like just keep it simple. You don't have to add all these indicators and using Fibonacci and alligator indicator like the MACD, whatever it's called. Like you don't have to use indicators. Like indicators are lags, right? Yes, it's good. The only indicator that I use is the EMA, right? That's like I barely use it, but like I use the EMA, the moving average line, to see like the momentum of the market and see where price is at. If it's a sell or a buy. If price is below this EMA, then I'm looking for sell. If it's above, then I'm looking for buys. It's a buy momentum. If it's trending down below this EMA, then it's a sell momentum. So that's why I use the EMA just to see where the market is at, and just to give me that extra confluence. But here, as you can see, it's retesting this 2295 internal zone, right? And it may touch here and then go back down, right? You can take this out here, or if it breaks above, then it may retrace. If it breaks above, then it may continue towards the upside, and then just catch the next zone for a buy, right? So I'm waiting for price to break below 2285 for a sell. Okay. If it breaks above 2295, if it breaks above 2295, then wait for the retest. Take the buy up. Okay. If it gives you a blue bearish candle, then that's confirmation for a buy. Okay. But it gives you a red candle. And that's a confirmation for sell. This game is all about probabilities. Okay. If it gives you a red, bearish candle, then it's probably just retesting. It's going to create a resistance and then it's going to go down. Does that make sense? So as you can see here, it whipped, right? It may create a bearish candle. So here is actually, we still have 6 minutes left on this 15-minute candle. Let's look at the 5 minute. You see at the 5 minute, it created a bearish candle already. See, so it's not gonna, I'm looking for sales here. And also be mindful of the time. Right now it's 8:08 Arizona time, which is 10:08 Central, 11:08 Eastern. So I look at the time and I trade based off every 15 minutes. So every hour, 15 minutes, I trade. Okay, I enter the trade. Okay, so every 15 minutes, the market will react. Every 15 minutes, the market will react. And the more you study, the more you back test, you'll see it happening. Okay, so every top of the hour, every 15 minutes, 30 minutes, 45, when it hits the 15-minute mark, 30-minute mark, 45-minute mark, the hour, the market will react. Okay. But as you can see here, market is reacting. You see it's creating a bearish candle. So there's a confirmation candle for a sell. Now, guess what? Here, you could have entered for a sell. But I'm not entering this trade because I already made my profits for today. I'm good. Okay. So it just gave you confirmation for a sell. You see, you could have caught the move at this first red candle here at the 5 minute and write it down. See that? And then you could have used impulse as a confirmation as well. It's telling you that it's sell. And when you see impulse, giving you a confirmation and it lines up with your analysis, then take it. Take it. You see, at the 5 minute, it's giving you a red macro trend arrow. It's giving you a red arrow here at the trend, red arrow here at the strength. Right? To study impulse, study Dr. Joshua and Brandon Boyd. Again, this is going to take time to study and to learn. But when it comes down to, I like to use Oris and impulse together. Oris, I use Oris for levels and market structure and break and retest, and looking at the whole numbers because it's giving you the same thing. And also Oris will call out trade ideas. Oris is, I use Oris mainly for gold. See here. So they called this out 14 hours ago, a month ago. But yeah, step 5, step 10, step 25. Well, step 5 is $5 increment. So it's every 50 pips. So every zone is 50 pips. You see, these are key levels. These are whole numbers, right? 2285, 2290, 2295, right? 2275. These are whole numbers. So you can trade off of these zones. Break and retest, break and retest. I use a step 10 because it's 100 pips, right? 2300, 2290, that's 100 pips. 2290, 2280, that's 100 pips, right? Step 5 is more for scalping. Step 10, step 25 is more for intraday / swing. Okay. So for me, I'm going to wait for a market to break below 2290 before I cash my sell, right? With my here, since I have 2285, okay, let me see. 2285, right? So we had it marked up already. 2285 is right here. You see, it's a key level. I'm gonna wait until market breaks below this structure here because it's supported, but for it to confirm a sell, support has to become a resistance. So I'm gonna wait until market trends down, right? Trends down, breaks below, retest, and ride it to the next zone. Break, break below, retest, boom, right to the next zone. You see? So you can use these zones to trade. You can trade off of these zones. See right now, it's at right here. Right now, price is trending up. But you see it's retesting the zone right here, 2295, because it was once a support and then it broke below, came back to retest. You see? So it's the support, and it's now becoming a resistance. So this may go down to this zone. All right. You can trade off of this zone from 2295 to 2290. I have 2290 can be your take profit, or 2285 can be your take profit, right? And then 2300 can be your stop loss because it's 50 pips apart. 50 pips. So and then but yeah, so like Oris will give you the levels, right? The key levels here. You also use impulse as a double confirmation to see the overall momentum of the market, right? It's in a downtrend. You see, it's giving you red signals, right? That's two. That's actually with the arrows. That's one. EMA below prices below EMA has two confirmations. Oris is giving you another confirmation, and then your analysis, right? So that's enough information, enough evidence for you to take that sell or that buy. But yeah, so like again, guys, just go ahead and study, tap into Go Live, tap into Evan Cabral to study Oris, go to his favorite sessions, tap into these videos. Definitely watch these videos. Golden Zone Training 1, Oris training, how to use Oris, market structure. He literally talks about everything on here. And then if you guys want to learn Impulse, study Dr. Josh and Brandon Boyd, right? They'll break that down for you guys. And also it's good to study them because they break down trading basics and fundamentals. They're actually one of the first educators I studied when I first started. Dr. Josh and Brandon Boyd, they're phenomenal. They're very polished, and they can literally teach you guys about Impulse. They're the ones that created it. So Impulse is really good as well. It's been helping me in my trading. But focus on one thing at a time, focus on one thing at a time. For my gold traders, start with Oris. Start with Evan Cabral. And then for my forex traders, and then also gold. Like me, I trade gold mainly. And if I see an opportunity with forex with UJ and EU, then I use Impulse, right, as a scanner to trade forex pairs, right? Um, and then I use smart money concepts, liquidity, market structure, support or resistance zones, break and retest. You see here, there was money here, and this is a liquidity sweep. You see how market came back down to take out these buyers, these stop losses, and then came back up. That's liquidity. I look for the money. Where's the money? Where's the money? Where's the money? It's money here. This is money. This was also money. All this is money. You see, all this is money. Money. All these sellers, they're selling, 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 selling. And guess when these drop, whoo, it took out all these sells. You see how it's all manipulation? When you see these moves happening, you know what to predict. There's money up here as well, right? This is smart money concepts. Study smart money. It's a little bit more advanced. Study Mike Navarrete. He's really good at that, explaining smart money concepts. Learn how to trade like the banks, okay? Because this is how the banks trade. They take out the retail traders, right? They take out all their money. These are all sellers, all these sell traders, right? All these retail traders for taking all these sells throughout during London session. And then when news drop, look, it took out all these sells. Boom. Took out all these sell orders, wiped out all this liquidity, took out all the stop losses, and then came back down. Came back down and took out this right here. Took out these buyers. These took out money from here as well. You see that? Because it whipped. It whipped here. Then boom. The 15-minute. See, this is liquidity here, money. It took out money here for the buy, and then came back down. Took out this money here, and then came back up, right? And then eventually it's going to take out more, right? It's going to take out, let's look at the 1 hour. See, when you look left, you see more, right? There's money here. There's money here. There's money here. Money here. But I'm going to take the buy here. I'm going to wait until price is going to trend down. So you guys can really capitalize on these sells in between, right? So remember, break a structure, break and retest at the key levels, break and retest, break and retest. You guys can catch a sell. And then when it hits this level, 22.35, this is where we're going to stop, and it's going to reverse towards the upside. So I'm going to take the buy here and ride it all the way up to 23.20 plus, right? That's more of a swing trade. But yeah, that's what I see. That's what I see in the markets. Okay, and let me see if I'm gonna take the fibs from this low, to this high. Wow, look at that. Yeah, it's 100% level right there for a fib. The 4 hour. Yeah, that's a 100% level, which is a strong level. See that? You guys can use a fib to confirm it as well. Why is it going to retrace there? Yeah, it's going to retrace here. Boom, bum. But yeah, that's how I look at it. But yeah, guys, really tap in, study more than you trade. You see right now, it's about to break above this structure. See, so it's a buy zone right now. It's buy zone. It never really confirmed for this sell here. You see, I was consolidating a little bit, right? And then, you could have just caught 50 pips there. So this is like a more of a scalp move, right? You could have caught the sell from 22.95 and write it down to 22.90. So it could hit your TP1, but it failed to continue to the downside, right? So you could have caught a quick scalp move for 50 pips. See? But I'm not looking for the stop move. I'm looking for at least 100 pips. And I'm looking for it to break below the zone, because if it breaks below the zone, then it gives me more confidence to take that sell. Because why? Because it broke below the zone. It took out this liquidity, broke below the zone, retest. It gives me a red confirmation candle, and then boom, I'll write it down. But it didn't do that yet. It will though. I'm waiting for this trade idea to hit. I'm not trading until I see this happening, and I'll probably throughout the day I'll probably continue towards the upside, and then consolidate a little bit, and then that's it, right? So if price breaks above 22.95, if it breaks above 22.95 and closes bullish, then and right now it's on a buy zone. I'm not looking for sales right now. I'm not trading for the rest of the day. I'm good. I'm just marking up. I already made my profits this morning. I'm good. And I'm gonna wait till Tuesday to trade, because today is Friday. It's NFP news. I caught the bag. I'm gonna wait until Tuesday to trade. I'm gonna take the weekend to reflect, to study, to backtest. Okay. Yeah, so throughout the day, every time there's news, and after news hit, price the market tends to slow down, because this was already the move. This was the move right here. Already, the move already happened. This was the move right here. This was the move right here. This sell. This was the move. This bullish candle right here was just the banks entering the market. This is all institutional, right? This is just the bank taking out the money, the retail traders' money. And then this was the real move. This sell was a move. This is a sell that I caught.
Is this from like smart money concept? Because I don't even hear anybody mention that anymore, but I did study it.
Yeah, smart money. This is smart money right here. It's more of a smart money move. And Mike Navarrete teaches it. Mike
Nice.
Navarrete. Yeah, Mike Navarrete. So this is more of a smart money concept move. And it was like the banks, when news hit, institutions came, wipe out all this liquidity here, all these sellers, right? And then took out money here as well, right? Took out all these sellers here, and then up here as well. This is money as well, right? And then it came down. True. I caught the move right here. I caught the sell here at 23.17 area, 23.19 actually. That's why I caught it, 23.19. And then I write it down. I had my stop loss at 23.25, which is the next key level. And I took it, write it down. Because as soon as I saw this wick, right here, I knew it was going to reverse. When you see this wick right here, it's going to reverse. You see this wick is all liquidity. This wick right here is just liquidity. It's taking out liquidity. You see this, the wicks, two, and the wicks again. And I look at the 5 minute, it gives me a bearish candle. I knew it was going to reverse back down. Because why? It wicked, took out liquidity, and then a bearish candle opened up. And then poof. Look at the 15 minute. You see this long wick at the 15 minute. But I took the trade off of the 5 minute. And once I saw this bearish candle forming, I knew it was going to reverse back down. Because it never closed above structure. It closed below structure. And then a red candle opened up below structure. So I knew it was going to sell down. So when you see this happening, take to sell, not to buy. If it was to close above the zone and it closes bullish, then it's going to continue. It was going to continue up. It was going to continue towards the upside. It's going to continue up, but it didn't. It closed below structure, and then boom. That's why it's so important to study candles, candlestick patterns. There's a book called the Candlestick Bible. Read that book to really study the candles. And if you don't have it, just let me know. I'll send it. Do you have it?
I think I did, but I don't know if I still do.
I'll send it to you. I have a PDF version.
Okay.
I sent you.
Let me look.
I'll send it to you on Telegram. But yeah, so like that's why I caught this up, because I knew this. I saw this happening, and then Google gave me more confidence. And then I looked at Impulse. Impulse gave me red arrows, red confirmation, so even more confidence to get in. So yeah, and then I ride it all the way down to 2285. That's where I exit. Why 2285? Because look, you gotta look left to be right. See that? See that? And this was money too. It took out here, this money too.
This is that trade you took yesterday.
What's up?
Right? That's that trade you took yesterday. It turned into a buy.
This one?
Yeah. We were looking at that yesterday.
Oh, yeah.
I'm getting good at this now.
You see the patterns now?
Yeah.
Yeah, the more
Oh,
you
and it did
study
it again.
Yeah, you see that. Look. Yeah, look. Right here. Like it took out this liquidity.
Yo, you
and it
creating
came down. And look.
a
And
master trader right here.
Yeah, and why you think it reacted here at this level, 2280? Because when you look left, look. Look left.
Same thing again. History repeating itself.
Look, when you look left.
Boom.
Boom.
This is too easy.
You see the
Look,
pattern?
oye, a mí, yo dije, it's too easy, but
Look
I'm
at
still
you
on the
now.
benches.
Yeah, you see it now though, right?
Yeah. I mean, with you, I bet you if I start doing this alone, I don't know what I'm doing. But one day I will. Eventually I will.
You will, like, yeah,
Real
you just
sooner
gotta
than ever.
just back test. Take this weekend to really back test. Like reflect, like study it.
Yeah.
You see 2280. 2280. See, market reacted here.
I'm just being honest with myself so I can overcome this. But yes, I see it. Send me this recording. I'm gonna study this all week.
Yeah, I got you. But yeah, look. Yeah, it's all just pattern recognition. Really seeing the key levels. You know, once you see it, it starts to click. Like, man, it's all just it repeats itself. It's all market structure, break and retest, price action, liquidity. You know, and tapping into Go Live. You know, studying from these educators and going through the bootcamp videos. That's literally all I did. I just plugged in, and then I just didn't give up. Just continued sharpening my axe and working on my mindset, working on my personal development, being more patient. You know, that's literally all I did. And be patient with yourself. Take time. Be patient to really study this, because once you see it, once you get it, like it's all up from there. You know, like yes, you'll get some lessons, but it's part of the game. You know, that's why it's so important to set up a stop loss. Like as long as you have a stop loss, you're already it's still a winning trade because you have a stop loss set up. Even if it hits your stop loss, you still won. Why? Because you practice proper risk management. It's all about risk reward. It's all about risk management. You practice proper risk, you're going to be a successful long-term trader. But if you don't practice risk and you don't have a stop loss set up, then you're not going to last as a trader. You're going to fold. You're not going to last, to be honest. I know some traders that don't set up stop loss. Like, why? Why are you doing that to yourself? You're not going to last in the game. Because without stop loss, you're you're going to blow your account. You're going to blow your account, you know? But yeah, and when price, you know, does reverse and does like you're on a, you know, price you're you're negative and price is you're on a, what's it called? Oh, what's the word? Drawdown. And when you're on drawdown, right, don't be afraid, like, you know, as long as you, at least you have a stop loss set. Maybe it'll go like this and then boo. Or maybe not, it'll stop you out. But at least you have a stop loss set up. Right? You gotta have enough breathing room. That's why I set up at least, you know, 30 to 50 pips. 50 pips is my sweet spot for my stop loss. So I set up at 50 pips. Okay. But in this case, it was 80 pips because it was news. News, I set up my stop loss anywhere between 60 to 80 pips at least. So that way I have enough breathing room, because in case of the wicks, you see how I wicked here? It could have wicked a little bit, you know, up. You know, when it comes down to news, I set up my stop loss anywhere between 60 to 80 pips because of these wicks, right? Because it wicks a lot whenever there's news, just like it happened here. But on a daily basis, on a typical trade, I only set up at 50 pips. 50 pips is my stop loss when there's no news and when there's nothing big happening. But yeah, but like even if it's like if it hits your stop loss, it's okay. Like, you know, it's okay. It's okay. You know, just practice more. You know, it's okay. It's part of the process. Don't be afraid to be in drawdown. You know, it's price. The market at the end of the day will do whatever it wants to do. You have no control of it. It's all manipulation. You know, you're going against the banks. You're going against institutions. You know, and yeah. So you see it right now. Market is slowing down. It's not really doing much. It's consolidating. You know, there's no more. There's not much volume. And that's typically it typically happens like that after a news event on a Friday. It usually slows down. So right now it's not a good time to trade. You know, just wait till Tuesday, study, and yeah. So that's the end of it.
Thank you.
Of course, I'm drop this recording. I'll you know, I'll I only send these recordings to whoever, you know, whoever asks and whoever hops on. You know, because I don't want to send this in a chat because it's too much access and it's only for certain individuals who's showing up. What's up?
It'll get leaked out. You'll become famous now. You'll go viral.
It's not that, it's more like
I'm just playing. I'm trying to be funny.
yeah, I mean I could, yeah. I mean
You gotta protect yourself too, you know. You never know.
protect the
There's
house.
some-
You gotta protect the house, you know, gotta protect
Your
the house.
value as well, because if it's so easy to reach, then you got nothing to sell. Or am I wrong?
Yeah, it's I mean, yeah, I mean like it's just to protect the house, you know.
I get it, yeah.
It's to protect the house, and